Hi everyone, welcome to this explainer. Today, we're doing something really cool. We are translating the highly technical 2025 IPSAB handbook into a fascinating look at exactly how your tax dollars are officially tracked and reported. If you've ever wondered how governments are held financially accountable on a global scale, well, you are definitely in the right place. We're going to look right under the hood of the conceptual framework that dictates how public sector entities around the world communicate their financial health and their actual service achievements directly to you, the taxpayer.
Here is our agenda for today. First, the government accounting dilemma. 2, meet the standard setters. 3, who reads these reports. 4, the core objectives. 5, treats of good information. And finally, 6, the reporting reality check. Let's dive in. Section 1, the government accounting dilemma, measuring public success. So, think about this for a second. When a public entity doesn't exist to make a profit, how can you actually tell if it's succeeding? I mean, in the private sector, the bottom line tells the whole story, right? A company makes a profit, generates a return for its investors, and boom, it's generally considered successful. But governments and public sector entities, they operate on a totally different wavelength. Their absolute main objective is delivering services to the public. And that brings us to the core of our dilemma. Governments hold massive assets. We're talking roads, military equipment, national parks, purely for their service potential, not to generate cash flows. I mean, a national park isn't held for sale to make a quick buck. You can't exactly list Yellowstone on Zillow, right? The government's mandate is to preserve it for current and future generations. Because of this, you simply cannot evaluate a government's performance just by looking at a traditional balance sheet. It's an entirely unique apples to oranges measurement problem. Moving on to Section 2. Meet the standard setters. Who makes the rules? To create global consistency out of all this complexity, we have the International Federation of Accountants, or IFAC. Now, IFAC facilitates a completely independent standard-setting board called the IPSAS. The International Public Sector Accounting Standards Board is the group that actually develops these global standards, which are known as IPSAS. Their ultimate goal is to ensure that whenever a public sector entity reports its finances, that information is consistent, comparable, and incredibly high quality, no matter what jurisdiction you're in. Now, what is truly fascinating about this setup is the strict separation that safeguards the integrity of these standards. It's really clever. IFAC provides the funding, the human resources, the facilities, the whole shebang. But they have absolutely zero ability to influence the agendas or the final publications. The IPSASB operates with full transparency and sets its own agenda. This ensures the standards are crafted purely in the public interest, totally free from any outside pressure. Section 3, who reads these reports? The primary users. So the crucial takeaway here is that public sector entities are directly accountable to you, the taxpayer who funds them, and the citizen who relies on them. Most government services are funded through what we call non-exchange transactions. That basically means you pay your taxes, but the amount of services you get back isn't directly tied to the exact dollar amount you paid in. Because this funding is mandatory, the accountability burden on the government is incredibly high. The primary users of these reports are service recipients, resource providers, and the elected representatives acting on their behalf. Think of it this way. You, as an individual citizen, don't exactly have the legal authority to just waltz into City Hall and demand a custom financial report tailored just for you. So these general-purpose financial reports are designed specifically to bridge that gap. They are literally built to provide the exact information you and your representatives need to know. Section 4, the core objectives. Why report? These reports really exist for two vital reasons: holding the government accountable for past actions and helping you make informed decisions about the future. Accountability means checking if the government actually complied with its approved budget, which, by the way, is usually a strict legal requirement, and seeing if they used your resources efficiently. Decision-making, on the other hand, is all about the future. While you can't just choose to stop paying taxes if you're unhappy with the service, you absolutely can use this financial data to inform how you vote or to lobby your elected officials for real change. Because governments are service-driven, just looking at a surplus or a deficit really isn't enough. We have to look at the actual volume, the cost, and the real-world outcomes of the services they delivered to you. I mean, think about it. If a government comes in way under budget, but the local roads are crumbling and the public schools are failing, that surplus does not represent a success. The financial numbers only have true meaning when they're placed right next to those actual service delivery achievements. Section 5. Traits of good information. Qualitative traits.
According to the IPSAS conceptual framework, every single piece of financial and non-financial information has to check 6 specific boxes to be considered truly useful. The information must be relevant, meaning it can actually influence your decisions. It has to be understandable to someone willing to read it with reasonable diligence. And it must be timely enough to actually matter. Let's look a little closer at the remaining 3, because they are absolutely critical for maintaining public trust.
Pay close attention to this concept of neutrality. Information simply cannot be selectively presented just to artificially influence your assessment of the government's performance. Faithful representation requires prudence. You can't overstate your assets to look good, and you certainly can't understate your liabilities to hide some looming crisis. It has to be a complete and highly accurate reflection of the economic reality, even when that reality involves really complex estimates. Next is comparability, which really answers the crucial "so what" question. It matters because it allows you to compare your local government spending against a neighboring city or against last year's approved budget. Without comparability, these numbers just exist in a vacuum. Now note that comparability doesn't mean total uniformity. If 2 things are fundamentally different, they should definitely look different in the reports. But you need that consistent baseline to spot long-term trends in service delivery and financial health. Finally, verifiability. Whether it's directly counting physical cash in a vault or indirectly checking the math on a massive inventory estimate, this ensures the financial data isn't just someone's unsupported opinion. Verifiability is exactly what allows auditors and watchdog groups to double-check the government's homework. Even when we're dealing with future projections, like, say, the estimated cost of a 10-year infrastructure project, the underlying assumptions have to be transparent enough to be verified by independent experts.
Section 6. The reporting reality check. Pervasive constraints.
Okay, let's get real for a second. A government shouldn't spend more taxpayer money endlessly compiling obscure data than the actual value that transparency provides to the public. That's what we call the cost-benefit constraint. And then there's materiality, which basically means we only sweat the stuff that actually matters. If a missing piece of data is so incredibly small or insignificant that it wouldn't change your overall assessment of the government's performance, well, it's not material. These constraints ensure that financial reporting remains a highly useful tool rather than just becoming an infinitely expensive bureaucratic exercise. Knowing just how strictly these accounting frameworks are designed to protect your interests and provide genuine transparency, I want to leave you with this final thought. Is your own local government's reporting actually measuring up? Are they providing you with the clear, unbiased, and comparable data you need to hold them accountable for your tax dollars? Well, next time your local budget gets published, you'll know exactly what gold standard to hold them to. Thanks so much for joining me for this explainer. And remember, keep asking the right questions.